Hey everybody, my name is Chris Harding with the Bucks County Management Team here at Coldwell Banker Hearthside. I'm here with Bob Williams, the second member of the three-member team of the management team. Bob does some fantastic statistics video for us each month, and there's a lot of information in them, so we really wanted to pin him down and ask him some direct questions that were submitted by a lot of our talented agents. So let's get right into it. Bob, you know, in all of your videos you talk about things about pricing and unit sales, inventory. Really, in the general sense, what does all of this mean to a buyer and a seller?
It's a great question. It's probably the classic question within real estate. Really, the best thing to do is to think about it first in terms of buyer and seller, that they potentially have divergent interest. The seller wants the highest price, the buyer wants the lowest price, and you can play that yin and yang through almost right throughout. So generally speaking, I guess probably the most important thing we would say is look to your agent as a source of information on critical indicators that, frankly, you wouldn't buy a $200,000, a $300,000, or $500,000 anything without them, such as where is the trend line on pricing? You know, do I have an appreciating asset? Do I have one that I'm trying to sell where I've got lots of competition? We don't often use that word competition sometimes in real estate, but frankly, when our friendly neighbor gets together with us, sell at the same time, that's inventory and it's competition. So really, all the elements turn into important, critical pieces of information that need to be understood. Price, competition, what have other buyers in the market or sellers in the market experienced in terms of various outcomes in negotiation. All things that are knowable and all things that we like to think we do a really good, probably we believe a superior job at providing our agents with those information sources so they can provide to both the buyers and the sellers.
Excellent. Now, in your past videos and the video we just produced, you've mentioned this tax credit things a lot of times.
Yes.
Can you tell a little bit more about that issue?
Yeah, we really talked about it, and I think this is probably one where we'll add a graphic for this, if not here, then in the other the principal video. So think about 12 months of any year, and think about the year that was 2010, January, February, March, etc., all the way through the end of the year. We believe and have found a fair amount of body of, if you will, commentary, because evidence is hard to find here. There wasn't a lot of great tracking on this at a tax level or at a detailed level, that people who were going to buy, people who were motivated to buy, who generally had the means to buy in 2010, that might have been, say, had their decision maybe based upon when they were going to get married or something like that. Let's say they were going to buy in November. We believe the effect of the tax stimulus brought that buying decision forward to somewhere between the first and second quarter of 2010, kind of juicing up those first couple of months, because we actually saw the same trail down of activity in the balance of 2010. We don't believe, and I think this is important, Chris, for ourselves as well as for the folks that listen to this, we don't believe there was any material change in behavior year over year. So we don't think the effect of the tax stimulus, if you will, stole the business from the year 2011, pushed it forward. The numbers at risk really weren't that big. So the effect was really to kind of move business around and has us scratching our heads sometimes in terms of comparing our numbers, but we believe that that's the effect of it.
So the tax credit, looking back a little bit, and I know a classic question we get from our agents, and we talked about it a little bit off camera, is can you forecast, you know, what's next? Where's this market going?
Well, we're asked that all the time, aren't we? That is really, first of all, it's a completely understandable question. You could turn on CNBC in the morning and you'll have various people forecasting GDP, forecasting where the Dow will be in a year, and all of that. Not so easy in real estate. It is almost a classic indicator in that past performance is no indication of future performance. But you know, Chris, I'm a firm believer, and we work and train our agents this way, that trends are meaningful, and you need to understand them. Noise can happen throughout any given sales cycle, but trends are important, and that generally speaking, we're looking at a pricing scenario now, as we discussed in an earlier video, that kind of puts prices around 2004, 2005 levels. Hard necessarily to predict, because this is almost the answer someone would like. are we at the quote-unquote bottom? Are we at the bottom? Well, some markets are selling more. We saw those in terms of a moderately priced market. So people are making decisions to purchase. They're probably looking at trend lines that we have available that you can look at and make a decision as to whether, quite simply, you think you're buying at the most opportune time for you as a family. Has the market essentially kind of hit its point? Is it starting to creep up? That's about the best that we can do, is to interpret trend lines. And of course, we do have the pending indicators, which is an indication of some degree of future activity.
Now, every time you talk about statistics, I wrote down some terms here. We hear you mention things like price and unit sales, inventory levels, and all of those great real estate terms. What one or two other items kind of impact sales and values that we should know about?
Oh, that's a great question. If you think about, if you take all of this aside for a moment, you know, all the elements we've talked about, and say, I need to know all of them, they're critical, you wouldn't be done. Because an equally critical element is actually, and it sounds a little trite in terms of real estate location, but the reality is that what's going on in the current market, literally, whether the, say, Bucks County, or for that matter, southeastern Pennsylvania, unemployment rate, does it mirror or is it a bit better than the overall rate in the United States? And the answer is it's a bit better. We tend to be maybe not gifted, but we certainly haven't seen some of the trials and tribulations of some of the really hammered industries, the Rust Belt and things like that. So unemployment, or what's happening in the labor market, is clearly key. Can't buy if you don't have a job, which kind of brings us maybe to the second point, and that of course would be the overall financial markets for the ability to get a mortgage and where rates are generally, which you could say is a representative or a signpost of the overall economy. So you don't see rampant inflation, you don't see rates going up. All those items are potential disincentives to people purchasing and being able to sell their home at a reasonable price. So where is the overall economy? Where is mortgage financing, and where are rates? Lastly, this one is really one where, on behalf of you, your agent needs to do a bit of homework, and that is, generally speaking, kind of coupled back to inventory, or to unemployment, and that is what's happening literally in my local area. And I'll just be very pointed here. In the Lower Makefield, Newtown, Upper Makefield kind of corridor, Lockheed is a major employer, thousands of people working there. 6 months or so ago, they announced the addition of a particular, they're going to shoot up a couple more satellites, a number more thousand engineers. Paying attention to things like that, because clearly that's a positive. I mean, it's not going to cause real estate values to shoot up, but in general, what are key employers doing in the area? And of course, lastly probably would be the area itself, which you really can't kind of change. It kind of is what it is. So are you in an area that is generally viewed to be a solid commuting area, and does it commute to multiple locations? And generally speaking, in Bucks County, okay, this is a bit of a blatant advertisement for Bucks County real estate, we happen to be in a relatively gifted area where people that live here can possibly rotate through 2 or 3 positions in, say, the Philadelphia area, Valley Forge, Central Jersey, Midtown Manhattan, and never leave Bucks County, because we have such a great commuting profile, which generally goes to values. And it might be one of those kind of under-the-table things if you're trying to compare, say, Bucks County values to Lancaster, Pennsylvania.
Well, Bob, we thank you as always for bringing us through this crazy, sometimes confusing world of statistics.
Had a lot of fun.
If you'd like to follow Bob on Twitter, it is bcodywilliams. Marianne Gallagher, the third member of the team, is at MAG232. I am at CBHChris, and for more video content, please don't hesitate to check out our Management Team YouTube channel, which is at youtube.com/CBHTeam. We look forward to speaking with you soon.
More questions.